Hello and welcome. This is almost like a soap opera. You do an episode, you get to some sort of climax period, and then the episode ends, and you wait to see how does the story go. And well, it's not getting too exciting. I finished off the 2.5 minute warning, and this is how the drawing ended. I drew this line in talking about this key resistance at some point supporting on the 18 average of highs and supporting the 18 average of lows in here. I was referring within this key high in here. And of course breaking out past 5,800. Something it attempted to do. So let's update this chart. This was last shown at 9:16 a.m. This is the hourly time frame. Let's now bring this up at 5:14 p.m. And here we have it. Okay. Welcome. Today is the 13th day of October. Everything you do is within your own risk, own reward. And it managed to make a move matching this level high again, breaking down below this low, but above this high. A lot of the things that's big with markets when you look, oh, there's a key area, sort of like, oh, this is a key area. Well, why is it a key area? That's because it had an amazing congestion area within it. Is that what this is making? It's already making this a little bit of a significant point to the barrier. If it were to say break down now, probably come here. But I'd also state that, oh, it's starting to rally from 5. Well, this is a key area because of what it did. And if it happens to break out from now, same thing. Oh, we're up to 62, 63. Oh, it's starting to pull back. Well, looks like we're on the 57 to 5,400 would be the key area. So it's already developed that in itself. Will it do at a stronger level? Well, time will tell. Let's move this on to the daily. And within such, it's broken past, well, a key level because it congested in this time frame for quite significant duration and such. It's overextended above the 18 average. It's another way of stating, yep, there's what is definitely what I would consider a leg higher. That doesn't necessarily mean that's where the top is going to be, but it just classifies, yep, that's good enough. Where when you break a key level, if it's going to come back, yeah, it's going to be this little area here, I would presume to be such. On the keyword F, 4250, upwards range, upwards, well, a little south of 5,000. Even 5,000 on the nose, a little north, still kind of counts. Now, earlier today, I drew this up, which represents volatility on the daily time frame going back the last couple of years. And there's only really a couple of takes that I was able to get from such. And that is number one, the key highs I've already signified, which these pretty much happen to establish when it gets past the 20 number. And those are usually the combination of two things. Either one, it's a bottom area after a downtrend, which starts a big move, or it's a significant decline. That's pretty much what these big moves above the 20% mark. Today's move is right in here, or the one that occurred of the 5,000. And it's more common that the bullish moves, you would think, on most codes, are going to be occurring with lower volatility. I mean, when you have a good up day, it's going to be closer to 15% compared to the down days in a secular bull market. And it's a good gain. It can do better. It's nothing significant. I'd be very impressed if it could really have an amazing up day and at least test some of these levels. Well, imagine if Bitcoin has a 60% up day. Free market, it's definitely possible. Improbable, but possible. Okay then, what's the next thing that I've noticed? And that is support. Pretty much it's just bottoming down in here. An area that was, well, look at this. I mean, this is just absolutely nothing in here. So something happened roughly around this point that has changed it. When I see this, this tells me behavior remains and is continuing to be very strong because there hasn't been any Oh my goodness, the market's doing nothing kind of days. The volatility has remained consistent. So roughly when did this period come in? Well, let's take a look at the data. And what we have here is the date on the left-hand side. So on row number 538, which is April the 4th of this year, the volatility for the day was 3.94%. And it's what it is. And oh, we see this 12-day on May the 4th. With some okay, well, 3 days around 6% the day before. Yeah, we have a 2.6 on May the 7th. But as we can see, there's the 3.5 again, but most of these days are extremely high. May, look at these consistent double-digit volatile days. A lot of double-digit again. So therefore, there's a big market change, market behavior change. As I'm looking at this, that pretty much had its indicator starting right at the start of May. Let's go back to the daily chart. And when we look at this here, this is start of May in here, price action at 1330, and that was where the old all-time highs were. So the event of Bitcoin making new all-time highs, something it had never done before, is what the trigger to it is. When we look at this on the weekly, and with May 1st being in here on the break of this 1300 level, if we draw in our trend line in here, May 1st also represents the time frame when it broke the logarithmic resistance level at this point. And you know, everyone is looking at these logarithmic charts with this trend line and seeing this happen. And I'm being sarcastic with that because most people use the linear scale, but it's worked really, really well when I see the break of resistance. Volume has been remaining steady, and the volatility, as I've been showing, has been remainingly steadily nice for movement participation, as that is what is going on. We look at the weekly time frame. There's really not too many dull weeks along the way. There's just a little bit in here, a little bit here, but a lot of them have good movements. And we see some of the ones in here, not much. We look at the movements that occurred back in here. Not as much participation back then. We're getting it now. And thank you for tuning in. Take care. Bye-bye.